Hey everyone, welcome to the morning call. I'm Laz, filling in for Scott, who is out for the holiday. This morning we're going to take a look at some indexes. We're going to look at some individual symbols, a couple short trades, a couple long trades, and actually some real estate, something I don't talk about too much in terms of some real estate stocks and some ETFs. That being said, before we start, yesterday I did a recap, the daily recap yesterday, hosted by StockTwits with an open Q&A for about an hour. And I got some great questions and some really good feedback from last night. So, you know, if you have the time, I'd say check it out. We covered some things a lot more in depth, did some education, just a really great event. So make sure you check that out when you have some time. Let's get into it today. We're going to look. We're going to start with the Dow. I'm going to put it up here. You know, the Dow, the S&P, a lot of the big, indexes here have broken support. We can see that clear break of support, which happened, about 6-7 days ago. For the better part of this week, we've seen some pops and drops. A lot of sideways here. You can see how these candlesticks basically overlap one another. The trades have been trading sort of at the extremes. You know, 2-day bounce into the average, then selling off back to the lows, and then snapping back to the average. So, you know, this week is sort of marked with indecision, intraday reversals, a little bit of chaos in here. You know, the selling has essentially subsided, and we could snap back into resistance, which, you know, would be into the 12,700 area on the Dow, which is also conveniently where the 21 EMA is, which you all know at this point is one of my more widely watched averages and areas. So we're going to keep an eye on any short-term strength, possibly even today, back possibly, you know, into resistance, maybe into early next week. I still think this down move that we saw throughout the first half of May is going to take some time and is going to, you know, continue to pop around. I'd like to see what it does really here into resistance if we can get that trade. So like I said last night in the recap, you know, I think the path of least resistance is, you know, maybe some short-term strength possibly, and then we'll see how that potentially acts into, you know, continuing this down move. As we did break through key support levels, volume did come up on this decline, and selling, you know, was pretty much across the board everywhere in specific stocks and, you know, sectors and industries, banks, technology, high beta. I mean, you name it, there was selling. So we're going to keep an eye on this, you know, this roadmap and what it tells us going forward. And the same is true for the S&Ps. We'll pop over the S&Ps here. Almost identical in that sense. You know, broke key support here in the S&Ps around 1340, 1345. Traded down to just below 1300. And like the Dow, you know, very similar looking chart here. You know, just sort of snapping around this week. Lots of overlap, lots of indecision. Tuesday we saw, you know, Monday, you know, a nice bounce off the lows. Tuesday reversal. Wednesday, you know, we reversed back to the long side, and, you know, yesterday was sort of neither here nor there. So we'll keep an eye out. Let's take a look at a smaller time frame. This is an hourly chart, just to get a, you know, more granular look here. You know, this was the high from well, I guess it was Monday into Tuesday morning. You know, we made a lower high. It looks like we're building, you know, some sort of contraction here in the form of some sort of wedging type structure. And this could break out to the upside again. Resistance would be up here in this 1340, 1350 area. On the hourly, the 200 EMA, which you can see in this black line, right there, that 1347 mark. So we're going to keep an eye on how this plays out, again, today into tomorrow. This is not, you know, something that gets me very excited. This is not a great looking, you know, long. It's not a great looking short. I think it's just a pattern right now that needs more time to develop. The path of least resistance, in my opinion, again, like I said, short term, you could see one more move to the upside, and we'll see what happens today, like I said, into Tuesday. Looking at the FXE, let's take a look at the euro for a second here. You know, so many headlines out of, you know, Europe and Greece and so many international headlines. But the FXE, again, and the dollar sort of go hand in hand here. You know, we broke this, you know, bigger support level 2 days ago. The trade really started up here when we broke 130 in the FXE, and you can see it's basically been, a bloodbath since that, breaking, this key support. Just a day or two ago, volume coming up. I generally, these types of trades, you don't want to start to do anything with them down here. Again, you want to look to, stay with the trend, but look to get involved on bounces. So you got a 2 or 3 day bounce here, and it immediately rolled over. So euro breaking down, and really nothing saying it can't go lower here. And we're going to take a look at the EUO, which is the same. It's the same ETF. It's the inverse, 2 times leveraged ETF here. And you can see again, as the FXE breaks down, the EUO is going to rise. We broke resistance here. So just another way to trade it. If you are looking to trade FXE, another way to look at this is through the EUO, which is, like I said, a leveraged ETF. For those that are, shorter term traders looking for some momentum, this is probably a better momentum oriented trade than the FXE. Let's move on and let's talk about some high beta tech. We can't really go a day without that because it's so widely watched, and we're going to talk about Apple as if I haven't talked about it enough. But it needs to be addressed, and we need to consider it as we make our roadmap for trading here, possibly into next week. We snapped back. We made a low here at 520, snapped back. Got a very fast snapback within a matter of, between Friday to Tuesday, the stock had traded up about 10% from 520 to about 570. So you saw a nice 50-point snapback there in just a day and a half. Now it's just sort of trying to figure out what it wants to do here. Again, we're into this declining 21. This is an area where there's going to be sellers. It's going to have some resistance. This is an hourly chart just to get a better look. This was that low that we put in, down here, like I said, around the 530 mark. Got that real fast up move, pulled back. This is what we call an ABC. This is usually a correction where, it'll correct downtrend. It'll rally up, it'll pull back, and then it'll make a C wave, which is just above this high, which it did perfectly yesterday morning and then started to sell off again. So I think this needs more time. I think it's going to probably, into today be a little tougher to trade. Lots of, like I said, shorter term ebbs and flows. I don't think you're going to see a breakout or necessarily a breakdown. When I say breakdown, at this point it would be really below the 550 mark, as there's really a pocket of air here or a tradable void below 550. So I think a couple more days here we'll have a better, roadmap as to what to do. Like I said yesterday on the VTF, in this type of environment, into a lower volume holiday weekend, I just don't anticipate lots of great action. I just don't see big money committing to a lot of risk over a 3-day holiday weekend, especially with all the headlines and the selling that's been going on. I suspect, if I'm giving advice to those that are, more of the short term looking for, opportunity today, I think less is more. Manage your expectations. One of the things I always tell all my traders. I think if you can keep your expectations of what you were looking for today under control, you'll probably wind up being very happy. And less, like I said, less is more here until we have more data. Let's move on to some other stocks. Just setting up that some eyeballs have been on. Amazon, another one, into this earnings gap. And stocks that generally trade into their earnings gaps will at some point fill the gap. This is starting to consolidate here below this 220 support area. You can see your declining 8-period moving average as the stock, has been, sort of up and down this week. You can see this red, green. As we rally up, notice how we rally into the 8 and then it sort of pushes it back down. Although we haven't broken down, I would keep that on the radar for a trade possibly, into next week, even today, for lower prices, as I suspect the stock, can trade back to the earnings gap. If not potentially even lower. Another stock that had that earnings trade was this ISRG, another high flyer, gapped up on earnings, couldn't really get through that earnings high up here around 590, 600, and you can see filling the earnings gap and even going lower. So, this earnings gap type trade in a weak market has been, opportunity for others. AutoZone, a stock that has just been an absolute staple for a very long time. We can look at a weekly chart here. I mean, look at this trend that this stock has had, for almost years at this point, going back to, 2008, just unbelievable. Every dip has been bought. You know, the question here is this dip that we've seen going to be an opportunity to buy, or is something changing here? Our daily chart tells me that something is changing. You can see our averages here have turned down. Snapping up yesterday into the 8, you know, gapping down on earnings a few days back. So we'll see what this, you know, what this gives us. Just a stock that I tend to like to watch here. Below support, broke support. You know, could flirt with some lower prices. Next level support would probably be the 200 EMA down here, just below 350, an area to definitely watch as our, you know, support level down here. So keep an eye on that one as well. And Priceline, another high flyer. Big sell-off, double top here at 770. You know, hit that high, rolled over very hard, undercut its prior pivot low, which was a signal that, you know, something is changing and the trend, this uptrend had officially been broken. Now it's trying to figure out what it wants to do, you know, into what it should now be an area of resistance, possibly even a little higher. The 680, 690 area. I'd like to, you know, watch the stock to see if this is, you know, declining volume, just a little bounce that sets up for another down move. But another stock that I think is having a very weak volume, you know, snapback this week, trying to, you know, take back some of the selling from the last 2 weeks. And lastly, Google, another stock that looks like it's potentially in that category of, you know, I want to go lower. As it tried to break out, failed very aggressively on big volume. Now it's just, you know, consolidating down here with the market. You can see this up and down. And it looks to me like, you know, with some time, a break of the, you know, 595 level with some volume, you could see a push down into the 560, you know, 570 mark here in the near term. So keep an eye on that one. Let's talk about some strength. We're going to look at Foot Locker here. You know, you really got to seek out the strong ones here. Foot Locker broke out ever so slightly yesterday, flirting with breaking out here. Good looking chart for Foot Locker for those of you that are looking for some interesting longs. You know, put together a good watch list. Another one is Bed Bath Beyond. You can see the obvious here again, flirting with breaking out. So some of these retail names, you know, looking good, acting well in a pretty, you know, lackluster tape. Sherwin-Williams, again, not a symbol that I trade, you know, too much, but again, a good-looking chart. And lastly, Expedia, we talked about yesterday in the recap, broke out on Wednesday. Just holding that breakout very nicely yesterday. I do think this may need, you know, a few more days to contract this breakout. You don't want to chase highs, especially in a weak tape. Let it set back up. It's either going to pull back to 44, which is now should act as short-term support and launch higher, or it's going to wait for these MAs. You can see our 8 and our 21 to, you know, catch up to the price of the stock, just like it did right here, you know, before launching this one higher. So a couple of longs there for those, you know, craving and seeking the long side for some trades. And lastly, let's take a look at real estate. And we're going to look at the IYR. IYR is a real estate ETF, and you know, this to me is an interesting looking possible short setup. You have a definitive level of support down here around $60, just a hair below. And this to me looks like it could be a left shoulder. This could be a head. And I suspect, you know, with more time, again, this is a time-driven trade, you might see a right shoulder develop here. And we could see real estate start to really, you know, come off. Some of the home builders have acted very well, but are now starting to build this topping pattern. So keep an eye on, you know, the IYR for this right shoulder to develop. That would basically, you know, be something like this, you know, where you have this peak. And then you have another lower high on the right side. So it's basically a high with lower highs on each side. So it's not ready yet, but something, again, on the radar for those to watch. And the inverse, the leveraged ETF to that would be the SRS, which is not, you know, again, not a great looking, these are not easy trades, but you know, the SRS to me looks like it's building, you know, sort of that inverse head and shoulder. Again, you have a higher low, and I suspect you might see a right shoulder here, which would be a bullish, as this is, you know, inverse to the IYR. And lastly, Simon Property Group, a REIT, same type of thing, you know, could be. SPG actually has a little bit of a different characteristic. It broke its, you know, it broke its rising trend line here. You can see going back for the last, you know, year or so. Broke that trend line, volume came up a little bit. Now it's just consolidating here. And I suspect, you know, you could develop into, also on the shorter term, another little head and shoulders pattern. Again, this being the head, the left shoulder, and this ultimately being some sort of right shoulder, which could take this SPG, which is a pretty good trading REIT. For those of you that are looking for some good trades, this stock actually trades pretty well in terms of follow through and setups. So keep an eye on that. Just a couple of real estate names, just a different look to the morning call this morning. Again, we spent so much time looking at the S&Ps and Apple and some of these widely watched things that it's nice to go off the radar. And lastly, the XII, which is an index that I cover from time to time, the institutional index. And I think it's a great barometer for the market because it's not a measure of it's not a measure of the same 30 stocks like the Dow or the S&P 500. It's a measure of the most widely owned institutional holdings. So it basically looks at all institutional holdings and it determines the most widely owned institutional holdings. So it's really a look at what smart money is doing and thinking with their holdings. And you can see the XII broke. We broke this level. We broke the trend line here on the XII. Just like the market, again, it's going to follow suit very similarly. Broke the trend line, broke support. Now it's into the 200 EMA. Now it's just trying to consolidate this down move to make a determination of do I want to bear a flag here for lower prices, or do I want to start to begin some up leg? So again, just another look here at the market, just sort of taking a different perspective. And the XI to me is a really good barometer for the market because it doesn't just look at a certain sector of stocks or a certain group. It basically looks at institutional money, which to me is what we call smart money and what really drives the market higher and lower. So keep an eye on that in the days ahead. Like I said, less is more. Into today, I expect a lighter volume trading session. I will do a recap. It will be very early as I'm going to probably work just a half a day today, and most of my colleagues are out today as my trading floor is very light. I'd say I probably have about a 20% occupancy of traders, just to give you an idea. And I suspect it's that way probably across most trading desks today. So, manage your expectations, and most importantly, have a fantastic weekend. I'll talk to you Tuesday.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.